Hello, this is Bruce Wan, Head of Research for MaxCap Group. In this video, I want to provide some comments on the state of the real estate market cycle in Australia by reviewing some of the trends in economic and financial indicators so we can draw some conclusion about where the market is likely headed in 2025 and beyond. Undoubtedly, real estate markets have been through some big challenges in recent years. Since 2020, we've definitely lived through some interesting times, with a pandemic, lockdowns, and an inflation shock all doing their bits to weigh down growth and push up interest rates. Out of these disruptions, we had to deal with some big structural changes in real estate markets. Many folks have become far more inclined to be working and shopping from home, which permanently reduced the demand for office and retail space. Altogether, it was not surprising to see the sharp pricing correction across all commercial segments. CBD markets were down 19% from peak to trough, warehouses were down 17%, while regional shopping malls fell by 25%, but over a much longer 6-year period. Meanwhile, residential markets fared much better through the downturn, with prices down just 2% over 7 months, supported by robust population and demand growth and a persistent housing shortage. In late 2024, there are more confident signals of a turning point in real estate markets, supported by better financial market conditions and expectations of lower interest rates from 2025 onwards. We can see this most clearly in equity markets, given the sizable upswing in share prices in recent months. At the same time, expectations for economic growth are looking a little bit better, lifting from around 1% in 2024 to a forecast 2% in 2025. Already, we've seen a very tiny pickup in commercial values in the third quarter of 2024. While the size of this rebound, around 1% in the quarter, is nothing to crow about, it does mark the first concerted pricing rebound since 2022, and it does signal a clear shift in investor confidence. For many investors, the big questions at the turning point of the cycle are: how sustainable is this recovery, and where do cap rates go from here? In this context, we are guided by several simple econometric models which tie together the historical relationship between the economy, financial markets, and commercial cap rates. Looking at this chart, we can see that with a small handful of economic and financial market drivers, we can readily explain historical movements in cap rates over many years and correctly call these turning points given some information about the market environment. With expectations for slightly firmer growth and slightly lower interest rates, we are well on track to see some cap rate recompression unfolding over the course of 2025. To be clear, the extent of these cap rate recompressions are likely to be very modest and nowhere near the pace of the cap rate blowout that came before it. However, the main takeaways from this analysis are simple and very useful. 1. We have seen enough improvement in the market to warrant tighter cap rates in 2025 and 2026. 2. The size of this recompression is likely to be slow and modest, at least to begin with. And 3. We are still several years away from the very tight cap rates that we had at the end of the last cycle. Altogether, we're becoming more confident of a cyclical turning point in commercial real estate markets, also with a very good outlook for the next vintage of equity investments. If you want to discuss this topic or investigate the potential opportunities, talk to us in the Capital team. This has been Bruce Wan for MaxCap Group.